Hi all, my name is Malika and today we are having Michael Benezra. Michael is a founder of ARS Capital. ARS Capital is a Boston-based venture capital fund and they invest in proptech, fintech, AI and Web3 startups. Thank you, Michael, for coming.
No problem. Thanks for having me.
How did you first become interested in crypto and for how long are you in crypto?
I haven't been in crypto we haven't been as a firm invested in crypto very long. Our intention wasn't necessarily to invest in crypto directly, but to invest in some technologies that where crypto was, where the blockchain was powering the technology. So we've seen more of that, platforms and SaaS programs that are kind of powered by blockchain. Obviously, after FTX, we saw a significant number of crypto exchanges come in. We put an intake form on our website because we don't want to leave out any startups. I mean, we prefer to kind of see everything that's out there. So we've picked up trends, but yeah, there's just been an influx of those kinds of platforms ever since that happened. And so, but as a technology, some of our venture partners have been involved for quite a long time. Leonard Johnson, who's on our team from Stanford, he's been talking about it, pre-2007. So he's been talking about it for a long time.
So he bought his first Bitcoin back in 2007, and now?
Yeah, he wrote a book on it a number of years ago, and it's like reading a prophecy. It's like, so, I mean, I wish I would have listened to him back then.
Yeah. Same. Okay, thank you. What are the benefits of Web3 technology compared to traditional web technology?
I like what Web3 technology can do on the graphic design front. I think the websites, I think how fast the technology is and all that you can do on some of these platforms is really impressive. And we're moving in that direction anyways. It's just a matter of time. The one thing so we invested in a company called Chain Starters, and Chain Starters is they are a no-code NFT platform. So you can mint, you can create NFTs on their platform, and they found a way to use it strategically for marketing and branding, and that's been pretty successful. They've brought in some professional sports leagues and private companies, and we think that's a really smart way to use a Web3 technology. We can see how it's applicable. It's not competing with anything in the market. Just being able to mint different products and also gives artists kind of something unique too, to be able to apply some kind of intellectual license to what they're doing, no matter where you are in the world, and to commoditize your art, which is pretty cool. So we've seen that. So those are the kinds of technologies that we're seeing. The one issue that I'm seeing the most is that crypto investments and Web3 investments in general are taking place through syndicates. So it'll be a group of angel investors or maybe smaller clubs that are investing together. The institutions, the family offices, they still don't know enough about the technology to be able to do due diligence on it or kind of determine whether it's going to be profitable or not. So, and that could take a while.
Thank you. Interesting. What excites you most about the future of Web3 technology?
I think, like I said, the democratizing of some of these different commodities like art and being able to mint some of those pictures. And in the case of Chain Starters, you can launch your own website in 10 minutes. And the website, you're only able to, sell NFTs on the website, but to be able to create something that's yours that quickly in a platform like that is pretty cool. I also like the fact that it's no code. That makes it easier for everyone to kind of get involved. And so that's exciting for us. The blockchain, I think, in the proof of work concept, it's starting to underpin a lot of different industries. So we're seeing it securitize real estate transactions. That's one way that we're seeing it applied, which is kind of an interesting one in the proptech space. And that's one I think that we're looking into, DAO being used consistently across the board. We're getting tons of those types of apps in places that, in platforms that you would never think blockchain would have a role in, are now finding their way in these different applications. So
totally, yeah, that is exciting. What factors do you consider when evaluating the potential of a crypto investment?
It's a good question. It's so difficult right now because when you see industry leaders with unstable financial situations, that makes it hard to evaluate everything down the pipeline. So if Binance isn't in good shape, how are we supposed to evaluate anything that's under Binance, financially, or AUM or transactions? The thing that I think has been most interesting for me is to see just how many people operate on these different platforms and how many transactions are taking place. There are some smaller trading exchanges that have come into have contacted us, and even the smaller ones, 50,000, 100,000, transactions, 40,000 users, like that's really impressive to me. And I hope you guys ask the question about, whether there's any connection between crypto and the crypto prices and the S&P or equities market, because that hasn't gone the way that I thought it would go, personally. I thought there would be kind of a reverse correlation there. When the market isn't doing well, crypto does well. When the debt ceiling is uncertain and the dollar is, can be significantly weakened, maybe people go towards crypto because, it's a different commodity. You can still use it as, for commerce. Bitcoin is so tied to the equities market and so tied to the dollar that it's hard to distinguish between the two now. So I don't know. And I don't know if that increases the valuation of Bitcoin or not, but it's not the direction I thought it was going to go in.
Yeah. What about crypto projects, like blockchain projects? Could you name top 3 criteria for you to invest?
So we use our venture partners, and actually we use another syndicate to evaluate some of the more technological features of those products. So I'm not doing the direct product due diligence on some of these investments. I think users is important. So if it's a public exchange and it's something that's B2C or even even B2B, to see the number of users is important for us. Validation is important. So seeing if there are any institutional investors currently in the project is important. So any e-commerce or fintech companies, Discover, MasterCard, we look for that. I also validate some of the institutions. So whether it be Stanford or Harvard, my alma mater, or MIT, if any of those institutions or the affiliates are involved, that's another thing I look at. But it's hard to apply evaluation on these companies. Really difficult, and it doesn't fit into the cookie cutter safe that you would execute for another startup transaction. It's really difficult to evaluate, and we also don't know what the AUM looks like for these companies. We don't know how much money or liquid money they actually have. We know there's a lot of money exchanging hands, and that can get complicated. I think what hasn't been explored is the opportunity to advertise on these platforms. I think that's where crypto projects can be very valuable, especially with people operating on the exchanges so frequently. I mean, you have a captive audience, they're there. So I think that's probably where the monetary value comes from.
Totally agree. Yeah, and super interesting. Yeah, and it's so cool to have a person with this strong financial background, because sometimes people say so different things. For some investors, the product is the most important thing. For another, they say the timing. So the product and the project it's the most important thing is the right time. And others say the team, and yeah, that's super cool. So many different opinions.
Yeah, it's hard. I mean, one thing that's been one thing that's uncertain for us too is the rising rates Bitcoin transaction fees. We still don't know how that's going to play out, but it's having a real world effect. I mean, if you look at the price of other tokens, you can see it, like a Litecoin, going up drastically in price as the fees for Bitcoin go up. I think even though a lot of people don't necessarily promote Bitcoin as a commerce tool or a currency, with how quickly money changes hands in this economy, it can be really useful. It can be useful for philanthropy, right? To be able to send money cross borders without worrying about KYC, AML, stuff, which obviously is there to protect for a lot of reasons, but it can also be good for like distributing money to somebody who's in a country that needs it. So there are a lot of different use cases for it, but yeah, we'll have to see.
Michael, could you please shortly explain us your investment strategy when it comes to crypto? Like simple explanation.
Yeah. So our crypto investments will take place through SPVs because we are evaluating deals on a deal by deal basis. So they don't fit into our larger fund structure. Also because those fund structures have more traditional legal, kind of requirements. It may sound kind of superficial, but honestly, it has to do with how many investors are willing to come into the SPV. So if I see that there's a community behind a project and there are other investors that are interested, we can open an SPV and co-invest with them. So what I do not like saying is people who invested in crypto early on in old technology and are now trying to evangelize it years later because they made an investment 2-3 years ago and it was cutting edge back then. I don't like saying that.
Could you please share some of your most successful crypto investments and what led to their success?
Ooh, I can't talk too much about that because some of the investments are not complete yet. So we haven't actually closed on some of these investment rounds yet. So I couldn't tell you anything specific about the companies.
Okay, yeah, you are too young.
Yeah, that too. So yeah.
Okay. How do you manage the risks associated with investing in crypto?
There's no way to really hedge risk. I guess the only thing you could really rely on is who else is invested in that particular company or that technology. So if I know other investors that are coming with us, have a reputable track record or a part of a reputable syndicate, I know that they're not investing in anything that's going to be too risky. Or even if it is, they're comfortable losing money of that amount, whatever it is. So we're not seeing any outlandish investments where people are really leveraging money that they're uncomfortable with. People are scaling back now. So, it's not just crypto, it's fintech in general. We're seeing a lot of consolidation in the fintech space. We're going to see a lot of consolidation in the crypto space. It's unclear when a crypto company shuts down what happens, whether they push users onto a different platform, whether there's any legal recourse, what happens to those people, what happens to that money. So you're always kind of taking a risk.
Yeah, thank you. What resources or tools do you rely on to stay informed about the crypto market?
There's a site that one of our venture partners runs a platform called Plato AI, and it has a number of different use cases, but he's been writing about crypto for many years. And it's kind of an aggregator of different crypto, trends and articles. And I'm also part of some, naturally part of some Discord channels and stuff like that, Slack channels, but mainly get my information from some of the other crypto syndicates that we're part of. I try not to read too much into the articles that come out because they're pretty surface level, tell us stuff that we already kind of know.
Totally. So. Michael, what advice do you have for someone new to crypto investing?
Oh, that's a good question. I'd say to the retail investor, never invest more than what you're comfortable losing. That's obviously, it sounds pretty straightforward, but you'd be surprised. Crypto has support levels. Everybody on your channel probably knows that, but those support levels really determine where these things kind of land. Similar to stocks, stocks have support levels. Retail trading has made it very, very difficult to know where crypto is going. We all think that there's a bottom when there's different, kind of stop gaps, but we really don't know if there's a bottom. And so I'd say diversify your portfolio. Make sure that you don't have, that you're not too leveraged in any particular commodity or industry. I like to say no more than 1%. That's what I'm comfortable with. And don't buy when it's going up.
Cool.
Don't buy when it's going up. And I would say, and this is not, none of this is like particularly like new information, but I'm interested in mining, and I think that mining in countries, particularly in third world countries that could use the money, it can be a really valuable tool. And it's something that we're seeing in South America, we're seeing it in Southeast Asia, like that I think can be really valuable. So in a way for some countries that don't have, that don't have large GDPs or don't have a lot of net exports to generate value. So Bitcoin mining, I think, is really very interesting and something that countries should look into.
Cool, very interesting. And what measures do you take to ensure the security of your crypto investments?
Of our crypto investments, we use encrypted platforms. I work with cybersecurity companies all the time, but there really is no way to make sure that we aren't vulnerable. But none of the exchanges that we've worked with have been compromised so far. So we're pretty happy with the results so far. But yeah. Cool.
Yeah, that's great. My next question is maybe you want you wouldn't respond, but I still will try. Can you share an example of a crypto investment that did not meet your expectations, and what lessons did you learn from that experience?
We haven't had any investments that have underperformed our expectations yet, just because we're too early stage. So hopefully we never have that experience.
Hope so too. How do you address concerns about the potential for market manipulation and insider trading in the crypto market?
Market manipulation is already happening, in my opinion. Insider trading, there's enough users on exchanges, I think, to hedge against large institutions conducting meaningful insider trading. So like an equities market, if you were to trade a security and there's obviously insider trading is legal, but if there was some kind of market manipulation by the institutions, you may not have enough retail investors or regular investors who can fight back to buy shares back to keep the stock from going under, except in the case of GameStop and AMC. But because that's kind of what was happening there. But there are enough Bitcoin users to make sure that market manipulation doesn't crash the currency or send it too far below certain support levels. Everybody owns some crypto. So in the same way that you can't really crash the dollar if you're Bank of America, you could based on sentiment, but for the most part, there are enough people out there that have so many ways to buy crypto to keep it from falling that far. I'm not too worried about it. And too many institutions own Bitcoin already. So if something nefarious were to happen, another institution like a JP Morgan, they have a trading desk for crypto now, they could step in and on top of that, if crypto falls below a certain support level, it's a good buying opportunity. So, that's the way I see it.
Nice. Yeah. What is your approach to managing the tax implications of your crypto investments?
Still unknown. Right now, we're just taking our guidance from the SEC as it comes along. Ethereum is still unclear how Ethereum is going to be treated. Bitcoin seems to have its own expectations and category, and it seems like it has bipartisan support. So, but honestly, the correlation between Bitcoin and the equities market really does make me think it should be traded like a security. It's so hyper connected at this point, and I think it would only encourage people to buy more, because right now the uncertainty is not helping the market. I don't invest in Ether anymore because it's uncertain how the regulatory market is going to treat Ether versus Bitcoin. And I definitely don't buy any other cryptos. So Bitcoin has institutional support politically and obviously financially. It's unclear whether Ether has that kind of support. So that's just my perspective.
Very interesting. And how do you handle the emotional and psychological aspects of investing in crypto, especially now during times of market turbulence?
Don't buy as it's going up. Don't buy as it's going up. That's the best advice I can give. Don't buy as it's going up. That's the best advice I can give, because just because Bitcoin does have that support, those support levels, you may not lose all of your money, but your margins may be pretty tight if you don't buy when it's down. I've said from the beginning, one thing that no one talks about is the fact that you can buy crypto when the stock market is closed. And crypto is very similar psychologically, has very similar serotonin impact to trading on the equities market. It's like that instant shot of serotonin that you get, by doing it, because it's a risk. So I can buy crypto at 2 a.m. I can't trade securities at 2 a.m. Yeah. So I think I get out of it. I'll put it this way. When crypto gets too stagnant, I think that's when people start getting out. People like the volatility there. So it is a roller coaster emotionally. You're not going to lose everything, obviously, but I'll give you an example. I used to work in foreign affairs. So I worked for the Israeli Ministry of Foreign Affairs. So I was a diplomat. And so look at El Salvador, right? El Salvador's president has pledged a significant amount of money to crypto, right? Hedging against its own currency, because its own currency is pretty weak. And they were taking out loans from World Bank. He bought crypto, I forget, maybe it was at $30 or $30,000, I'm sorry. And it went down to $9. And my first thought was him, and he didn't get out. And he rode it all the way back up. And so, just treat it like the stock market. Never get out when it's down. Never. You're baking in your losses if you get out when it's down.
Thank you for an advice. And do you recommend buying Bitcoin now?
Oh man, I can't give official investment advice, or I can, but I won't. But the debt ceiling drama seems to be beyond us. It's Monday. I have no idea how traders are going to treat it on Tuesday, but I can tell you that it's further proof that Bitcoin is directly correlated with the equities market. Because if it wasn't, the currency would have been volatile right after that news came out. So that's what I was expecting. I was expecting a debt ceiling deal to get done or not get done. And from that, based on that, there would be volatile crypto movement. There really hasn't been. So whatever the equities market does tomorrow is pretty much going to determine what Bitcoin does tomorrow. So I would say, I can't say buy or sell. I would say just wait. Wait and see what happens.
How much should it cost for people to buy it and to act smart?
Like what price should you buy it?
Yes.
Depends on what your thesis and your time. I'll tell you whatever a financial advisor would tell you, which is depends on your time frame. If you're trying to get in and out in a year, you're gonna have a different price than if you're trying to get in and out in 5 years or a day or an hour. I would say the fees right now make it very difficult to make a quick profit on crypto. Very, very difficult because the fees are so high. So you should always consider the fees. And right now, it might close your margins even tighter. So even if crypto is shooting through the roof, to know that transaction now is going to cost me more makes it a little bit less digestible to make the investment.
Thank you so much, Michael. It was such a pleasure talking to you.